Tesla has always been one of the most talked about stocks in America, loved by believers, questioned by skeptics, and closely watched by Wall Street. But right now, Tesla stock is at a crossroads. So the real question is, what should US investors be paying attention to next? Welcome back to the Coverage Council. Today, we're breaking down Tesla stock, the numbers, the challenges, and the potential ahead, all without the hype. Tesla isn't just another car company. It's one of the most influential stocks in the US market, and its movements often reflect broader investor sentiment toward growth, innovation, and risk. Even after years of volatility, Tesla remains a heavyweight, part of major indexes, widely held by retail investors and closely followed by institutional money. But leadership in the EV space no longer guarantees smooth sailing. Let's talk fundamentals. Tesla continues to deliver vehicles at scale, but growth has slowed compared to earlier years. Price cuts, especially in the US market, have helped maintain demand, but they've also squeezed profit margins. That's a key concern for investors. Revenue is still strong, but profitability is under pressure. At the same time, competition is increasing. Traditional automakers and new EV players are aggressively targeting the US market, often with lower-priced alternatives. For US investors, Wall Street is focused on three major factors. First, margins. Can Tesla stabilize or improve its profit margins after all those aggressive price cuts? Second, growth catalysts. Investors are watching closely for updates on new models, progress with full self-driving, and expansion in the energy storage and AI businesses. And third, leadership and vision. Elon Musk's vision has undeniably driven Tesla's rise, but it also introduces uncertainty. Markets are paying close attention to execution, not just ambition. This leads us to the classic bull versus bear debate. Supporters believe Tesla is more than just an automaker. They see a future driven by AI, autonomous driving, robotics, and energy solutions. If Tesla successfully monetizes full self-driving or scales its energy business, today's valuation could look reasonable in hindsight. On the other hand, skeptics argue Tesla is still valued like a high-growth tech company, while operating more like a mature automaker. If margins continue shrinking and growth slows further, the stock could face long-term pressure. So, what does this all mean for US investors? For American investors, Tesla stock right now isn't about short-term hype, it's about your personal risk tolerance. Tesla remains a volatile stock. That volatility can create opportunity, but it also demands patience and discipline. Whether Tesla fits your portfolio really depends on one question. Do you believe Tesla's future is driven by cars or by technology? Tesla stock continues to divide opinion, and that's exactly why it remains one of the most watched names in the US market. At the Coverage Council, we focus on facts over noise. If you found this breakdown helpful, hit like, subscribe, and let us know in the comments, are you bullish, bearish, or staying on the sidelines with Tesla? Thanks for watching, and we'll see you in the next coverage.